Hello everyone. Today I want to explain how to interpret the economic calendar and why it's very important to consult it before proceeding with trading. The economic calendar lists all the relevant news from the global geopolitical landscape. Each piece of news has its importance and impact on financial markets. First, let's go to investing.com and select economic calendar from the news menu. At the top, select the time of your region. Now let's set the filters. Below, we can select the markets that interest us. Usually, it's best to select the major markets involving the Eurozone, the US dollar, the pound, the Asian market, and the Australian market. At the bottom, we can filter the news by importance. I recommend enabling only news of medium and high relevance, measured with stars. Click Apply to make the changes. As you can see, today the markets are quite calm. There are only medium impact news, so no major market upheavals are expected. By clicking on a specific news item, a panel will open with the description and any economic impact. Since there are no significant news items, let's look at the previous day. You can change the day at the top of the calendar by clicking Yesterday. The news about unemployment in the United States usually has a significant impact. In the last 3 columns of the calendar, there are 3 entries. The current result, so it means the ongoing news. The expected result, that is the forecasted one by analysts. And the result from the previous week. The impact of the news is based on these 3 parameters because if the result is lower than expected, it will have a different impact compared to when it is high. The news about unemployment says, a higher than expected reading should be taken as negative/bearish for the USD, while a lower than expected reading should be taken as positive/bullish for the USD. But be careful, because it's not always the case. Let's look at the chart. As you can see, at 2:30 p.m., the dollar against the euro significantly dropped, even though the outcome was favorable compared to the prediction. Economic news also has a significant impact on commodities. If you see here, at 5 o'clock on February 22, Italian time, there was news about oil inventories. The description of the news says, if the increase in crude inventories is more than expected, it implies weaker demand and is bearish for crude prices. The same can be said if a decline in inventories is less than expected. If the increase in crude is less than expected, it implies greater demand and is bullish for crude prices. Indeed, if we look at the US oil chart, at 5 o'clock, the price skyrocketed because the outcome was positive but lower than expected. The advice I want to give you is to refrain from trading at least 15 minutes before and after the news. If you have open positions, make sure to apply an appropriate stop loss. Thank you all for watching. Don't forget to subscribe to the channel. See you soon.